Hello and welcome to Exchanges for another week. I am so excited to be bringing you this episode. I've been waiting for this person to come onto the show for quite a while. And with that in mind, let's not sort of beat around the bush. It is the fantastic Mary Delahunty, the CEO of the Association of Super Funds of Australia. Bit of a mouthful. That's why they call it ASFA, the voice of super. And who better to explain just how incredible superannuation is to household wealth. Because that is what it is, and what Mary will go through today in the exchange is actually outlaying just how big a player Australia is. Before we do get into exchanges, please be aware that we now have a fantastic sponsor here at Exchanges. It is the More app, a lifestyle by design app designed to help everyday Australians manage their wealth, grow their portfolio in things like property, etc., in an all-in-one access app. Please go to more, which is moorr.com.au to find out more. But without any further ado, the fantastic Mary Delahunty. Mary Delahunty, welcome to Exchanges. Look, it would be remiss of me. We are talking 24 hours after the Trump tariffs have just been introduced. I've got to get your opinion, considering that you are the face of, the largest investable funds in this country. Did you make sense of it?
Did I make sense of it? Goodness, no. But let's sort of break it down. I think what we saw overnight, we're talking the night after the equities markets have had a chance to respond. And so they've certainly responded quite dramatically. But it's still pretty noisy, I think. And one of the great things about superannuation investing is that there's a 25-year sort of time horizon. So you can, with the luxury of time, zoom out and say, well, what could we expect over the very long term? And that's a luxury not all investors have, but super investors do. So I think within the funds, what would be happening and what would have been happening for the last couple of weeks is the analysts in the funds would have been scenario planning what the possibilities are, what the knock-on effects are. We saw over the last couple of weeks with all the noise about tariffs, what might happen. Equity markets were starting to price in anyway. And so I think now what's left to do is figure out what are the data sets that tell us what's going to happen in the real economy, and what are the opportunities in volatility, because long-term investors can make the most of some volatile opportunities. When would they take those when would they take those chances? When does the noise start to fade? And then I think the third thing that we'd be looking at is what reciprocal actions countries or sectors might take that will also dampen growth or change the prospects of some sectors. So that's all still to play out, I think. But inside super funds, they're looking at that diversification. They'll be taking what we call dynamic asset allocation decisions along the strategic asset allocation route. Mm-hmm. Which make things so simple. We really like to make things simple with the language, but they've been making decisions on this over the last few days. Yeah.
Yeah, I think the interesting thing about what you've just said, which is also, probably the questions you're getting not from the members that you represent, but obviously the members inside the members that you have is, if I am closer to retirement, what's my super going to do? Yeah. I think you've answered that. I think the better question to then go on for you is, you talked about the real economy and you talked about the dynamic allocation. Do you think what is probably going to happen in a very short period of time, because I think we also need to clarify that over the next 6 to 18 months, because he's got to the midterms in November next year to sort of get on with this before he possibly loses control of either Congress or the Senate. Do you see that Australia will start moving towards what we already have been doing, but closer regional neighbours like Asia? Do we start looking back to Europe and that as an investable opportunity, or is it still, again, waiting for the models to really give you the clear indication about where the next risk upside is?
Little from column A and a little from column B. So I think yes, that's so helpful. Sector by sector. So let's take Australian beef exporters as an example. They would no doubt be looking right now and would have been working with their industry associations over the last couple of months thinking that this was coming, about finding new markets, the same way that the wine producers had to do when when there were China trade differences going on there. Then that would be happening at a sector level. if we come up one level, and what's happening in the real economy, and what does that mean for investors in real assets? What does it mean for economic data that would tell us about the global prosperity, like employment, productivity levels, global sort of poverty levels and things like that, pay. And you can see that jurisdictionally, like in regions, our near neighbours have been quite heavily hit by the announcements of the tariffs. That Southeast Asian region, heavily trade dependent, heavily trade exposed, and that they will be feeling that right now. I think we get to see that play out in detail and to see what actions they might take as a result of that. And then we have to think about what's going on in the US. And Australian investors do have a lot of superannuation money exposed to that capital market. That's not surprising. It's the world's largest capital market, by and large, with good governance, and by and large operating under a common rule of law. So it's not
saying that with tongue in cheek, clearly.
A few caveats today, but let's see how it goes. But that's to be expected. So, and they've done incredibly well over that exposure over a number of years. So there is also some things to play out just in the US. One thing to keep an eye on, and not unless you're really struggling with sleep, is the bond markets. And I think and this is where, so most Australians in their super have their superannuation in what's called a default fund. Your listeners will know what that is. It's a diversified fund across a lot of different asset classes that try not to act in the same way at the same time. So while the equities markets have taken that, are starting to price in some of what they believe to be risk in the system, the bond markets will start to operate differently. And so it's that diversification that can be key to the long-term returns over time. And that's where I think it's worth keeping an eye on.
I'm going to come back to all of that because that's my bread and butter. I love it. But I did want to get back to what I wanted to start at this because, again, the Trump thing has completely thrown the way I wanted to start at this exchange, which was, can we go back a step and actually look at super as itself? Because I know you've just released at ASFA this beautiful report about explaining the super system and how big it's getting, how big it will be, and why it's such a massive, massive driver of household wealth. Because I think this is probably lost on a lot of people because it is this mythical thing into the future, superannuation. Can you take us through the report? Why super is, with flaws, and we'll come to that later, but is such a beautiful wealth creator for the household?
Oh, I don't think super's ever been described in such eloquent terms. It is a beautiful wealth creator, you're right.
Yeah.
So I wanted to do this research at ASFA because I think we've all had a good understanding of what super can mean to individuals when they retire. And it is a game changer in terms of prosperity and dignity in retirement. And people retiring now haven't had the full life exposure at high levels of savings that the rest of us will have, but it is meaningful to them nonetheless. But I also wanted to examine in this research what that means for literally every taxpayer. Babies being born today are still better off because we have a super system, even though they don't have a super account, because we haven't managed to wander into hospitals yet and sign them up, but, it could be on the cards. But
Good time.
Not ruling it out. But the that understanding what it does for the economy, not the economy as some sort of peripheral kind of thing that happens, but how we're all part of it, is quite unusual in the system that we have. And so, yes, it's an enormous pool of savings. We think what it's done to household savings is created an extra $500 billion of household savings that wouldn't otherwise exist. Mm-hmm. That, to have household savings like that, that's your underlying resilience, I think, in the system. The other thing that it's done is if you look across OECD countries, so other like economies of ours, their GDP spend on their public age pension, so what the government gives to people, is somewhere around 9% and predicted to grow to over 10% by 2060. Ours is, by contrast, at 2.3% and will actually decrease by 2060 to around 2%. So not only are we starting at a lower base for that's public spend on age pension, we're decreasing the public spend on the age pension. So every single taxpayer, babies born today, will have less liability for the rest of us aging than they would otherwise have. That money then can go to public services. Like that's the difference of the Australian system.
I'd agree. And look, that was the concept of what it was brought into, was to take away the dependence on the age system, and the fact that we knew we had an aging population that would come to the fore where we are now when it came about. But you spoke then about the impact on the tax system, and I agree it's certainly taken a lot of pressure off the spend side of the government's balance sheet. But it is also a question I've got to now raise with you about some of the slight flaws of it, is that the tax system is also skewed to putting more money into super for the wealthy, and it is creating a large divide because, again, putting more money into super, reducing your overall tax bill, continues to ramp up asset growth in the higher incoming tax brackets than it does in the lower. How do we counter this? How do we get around the fact that the super system absolutely is creating wealth for the household, and that's the beautiful thing about it. But it does also now have a problem where the tax system in it is starting to create a disproportionate increase for those that have over those that don't.
Yeah, it's always worth looking at. So the tax, when we say the super system, you're quite right, because it is a tax construct, isn't it? It's a bargain between working people and the rest of the nation to say that if I set money aside for my retirement, I'll receive a less tax in that system for having done so. And so whenever you've got that kind of bargain going on, you have to make sure we think that it is appropriately rewarding the right people and making sure that it's as equitable as possible. Because if there's tax concessions going in, that's less public spending. Public spending usually goes to those who can least afford it. So the equity element of our super system does deserve more attention and revisiting all the time. There is a piece of legislation stuck in the Senate, such that it is, and which seeks to redress that somewhat by putting an additional tax on the earnings of the assets if you hold more than $3 million. And again, that's not everything. It's got some hairs on it, that one. Yes, I mean,
I think that's a good way of putting it. It does have hairs on it. I mean,
it's got a calculation of unrealised capital gains, which people are pretty uncomfortable with. It's not completely unusual to do that. I mean, many of us pay land tax, so we've seen calculations of unrealised capital gains go on. But there are ways you can get through that, and there are ways we can address indexation, etc., that would allow that, I think, that tax to be collected, which is probably right and proper to do, because, as you point out, the equity element needs continually revisiting.
Because that also follows on to the fact, the other thing about let's call it a pension system, not superannuation, to sort of put it to the global setup. We are also one of the only nations on the planet that doesn't tax pension phase. With the aging population that we have, and the increasing, particularly of the 5 major components of the federal government's spending, aged care and health, which we know an aging population really impacts. Do we need to actually have a look at the fact that once pension phase comes about, there has to be some form of tiering with the taxation collection for that as well? Because again, if you look at those that have and have built are then paying zero tax and get to fall back onto the state and federal systems with no tax, is that fair?
I think that these are all conversations that are worthwhile having over time as the system matures. But for the moment, for the most part, that is working quite well. It means that even though there are tax concessions going in, it's still an affordable and sustainable approach to retirement, and it provides quite a lot of incentive for that funding in retirement for not reliance on public pensions. So I think there's some delicate economic modelling to be done before that conversation can be had with a great deal of sort of detail. But it is a system that people have I don't know, they've baked their ideas in on, that they're well used to, and they're incentivized heavily by that.
Yeah, because the reason the question gets asked, and listening to the listeners that I have, they are the younger generation that looks at this from the point of view that they are going to get hit with bracket creep. They're going to get hit with the highest level of taxation collection. You talked about the child born today. They are going to get even more impacted by those tax scenarios going forward. The tax mix is a question. And so I do want to go back onto it, is that superannuation at the moment does have a tax system that is incredibly generous. When do we start having that question, and when do we start having that debate?
But probably the younger people are, as the system matures up, I think it's probably fair that they will want to have that debate. At the moment, there's a little bit of discussion about superannuation being used as estate planning, as wealth sort of transfer tools and things. In APRA regulated funds, so in the bigger funds, we don't see a lot of that happening yet. So the balance actually still is that people will die without any super.
Yeah.
So there is it. I think it. I don't want to dismiss it as a conversation.
Sorry to interrupt you on that. Sorry to interrupt you on that. Can you actually tell us the figure? Because I think that's also what needs to be known, is that I absolutely agree with what you're saying, but I don't think people fully understand that the average super balance is significantly lower than what it actually is believed to be.
Yeah, I probably can if I have a look down here at my notes. So leave it with me for a minute. But yes, it's so we're let's say people are retiring today, women. And by the time we take together, women and men sort of average at retirement, let's say age 67, they've got about $185,000 in superannuation. So they're relying still on the age pension, but we know that as the superannuation rate goes up to around 12%, it goes up 12% in mid-year, around all of us now will be retiring with a lot more in our super balance, and we'll be retiring with a longer exposure to those higher levels of savings. And so these kind of questions of equity, they do matter to future generations, and I don't want to dismiss them, but it's not the reality of people retiring at the moment.
Yeah, and I think that's why I wanted you to really sort of deal into it, because I still think there is this belief that, at the moment, the retirement and the tax breaks and the system that's set up is we'll get there. I mean, the latest report that's come out about how much you need to retire per annum is 40,000 or just over 40,000 for a single and about 70,000 for a couple. But that also takes into consideration that you've paid your house off completely,
That's right.
which is also not necessarily the fact anymore. I'm going to slightly pivot. We'll come back to that later. I want to pivot slightly as well, because the other thing you spoke about right at the start was around bond markets and investable areas. There's been a lot of discussion, particularly in the last 6 to 8 months. Australia is running out of places to actually see exciting investable opportunities for superannuation. Can you take us through that first? And then I'm going to ask you options that Australia could create to actually sort of plug that hole.
Yes. So let's have a think about, okay, so there's $4 trillion of Australians' money under management. It's an astounding kind of figure just to think of anyway. If you think about every year how much is coming in, not just from the deferred wages of people, but if that's returning on average over 25 years about 7.5% a year, then the returns need to be reinvested somewhere as well.
Yeah. So
the challenge for the investors inside the superannuation funds, and slight sidebar, when Australian superannuation funds advertise for investment professionals these days, it is a worldwide search. We're one of the most desirable pension funds to work in internationally because of the way in which the system is constructed. So we are attracting some of the best talent into our investment pool. That aside, they've got to find places to put that money to work. And if you think about the different asset classes, and I know your listeners will be well across this, but buying into equities markets can be done like that. Well, I'm sure it's not like that. There's buttons to be pushed and whatever.
Enough. Yeah.
It's close enough, right? This is why. Yeah. This is why they used to love me in the investment team. That's not how it works, Mary. Anyway, it's done like that. think about then the real assets. So a lot of the Australian investors are experts in and have been able to develop expertise in what we would loosely term real assets. Real assets, think about infrastructure investments, think about property. And if you dig under what's an infrastructure investment, think about an airport, think about poles and wires, toll roads, bridges, wind farms, solar farms. Now, you can't just think, I might buy one of those on a Tuesday.
No.
So those transactions are what the investment teams call lumpy. And so you've got this portfolio that you need to hold because of the strategic asset allocation. You hold certain assets, exposure to certain assets in certain amounts within a band. So to make that happen and to keep that banding and that exposure right, you have to be on the hunt for opportunities all the time. And those opportunities will not just be in Australia. No way can they be. And so whilst the equities sort of portfolio might be easier to transact quickly, that's the nature of it. The unlisted assets, they're harder, they're lumpier. And you need what we refer to as deal flow to make sure that you've got opportunities on the horizon and you're constantly on the hunt for them to bring them forward. You use a lot, either directly invest or through investment managers to get exposure to those opportunities. So they're definitely going to be international as well as in Australia. It's around about half and half at the moment. So of all the superannuation assets under management, half will be held with an international exposure. That's across most asset classes. A lot of that will be exposed to the US, to bring us back to some of our earlier wide-eyed conversations. But there's a lot of exposure in other markets as well, including in Europe, in Asia.
So the question that extends from that, the link between government infrastructure and super funds. When can we actually start seeing more and more of the money that has been clearly directed towards the prosperity of the Australian people being part of the government projects that we need to get up but are funding poorly? How are we going to have that discussion?
Oh, I'm ready for a coalition of the willing to have that more of that discussion, and I think it has to be
waiting there to be tapped, right?
Right, it's exactly, and it's not about doing good and being good citizens, etc. There's always an element of that, and you can sort of spin that however you want. But there are good investment opportunities to be had. For example, in an energy transition, that will require a government partnership as well as investment capital that is seeking a return. And there's nothing wrong with that. And we think, like I personally think, that the market has a lot to offer in terms of being able to deliver solutions.
Yeah, I agree. So how do we start that discussion?
Well, I think it's somewhat underway, but it's sector dependent. So why don't we talk about in Australia and the energy transition as an example of where that could be happening? So I think we spent a number of years in this country probably debating whether or not we needed an energy transition while the market was trying to get on with it anyway. But it is one of those greatest examples of that you actually need solid policy settings in order to be able to engage with long-term investors. So I feel like we're on the track for the solid policy settings somewhat now, and the mechanics of government are important too. So you've kind of got those things in place. So then the conversations are able to be started. The challenge in the energy transition, I think, is that we have conversations going on at a very startup level, and they're right too. You need innovation, and there are a number of agencies, mix of government and private, that are looking at that sort of early stage investment, sort of mid-stage, I suppose, investment in startup opportunities in the energy transition. One of the things that we've talked about, we've done this at the Investor Roundtable, which the Treasurer puts together, which is an incredibly high-powered and scary group of people. When you go in there to present, I had to, like a little lump in my throat the whole time going, whoa, goodness. But we need to talk top-down now. So what in the country do we think the grid should look like, and how do we start to finance, that and come from a really high level, big chunky infrastructure discussion down towards the startups, because superannuation funds will play and will seek opportunities in startups to a degree, but where they are more comfortable, where it makes more sense for their investment horizon and where they can feel comfortable with appropriate risk-adjusted returns is probably higher up in a different stage.
So on that, the other thing that then I probably need to talk about, you spoke about bonds before and where the fixed interest market sits. The fact that it gives you that surety around the return, it gives you that baseline impact that the asset managers can therefore go, fixed income will return X, therefore we can then spread over basis points of X to make the return we need to do. Where does super in the future and where does the funds in the future follow an American model around using fixed income, mortgage-backed securities creation, that kind of space going forward? Because with the energy creation, if it was the superannuation that was actually providing the funding and allowing the infrastructure to be done elsewhere, or can we also then start asking, can super go into the retail side? Can it actually start looking at the property space and offering 30-year fixed rate mortgage systems like they do in the US? When and how do we look at that perspective?
I've got a dog barking in the background, which I do not know why, but it's there must be there must be a delivery. So, let's have a think about let's go to the bond markets for a start. So super's always been pretty active in bond markets. It's a part of that the need for a diversified portfolio. If you look though at the issuing of the bonds, and this is, I guess, something that super will be interested in too. What I'm kind of interested in on a personal level is how much debt, because bonds are someone else issuing debt, basically someone else taking on more debt. How much debt can the issuer of the bond actually? How much can they live with, really? And who is issuing the bonds? So recently, with a group of superannuation funds, we met with over a different period of time, 4 of the governors of different states of the US. They've got varying degrees of a municipal bond market that that's either quite mature or just starting, and I think that's really an interesting investment opportunity in the US, regardless of what's going on at a federal level, because they have quite a lot of control of their own municipal, either the issuances of debt or the infrastructure that might be within that municipality, or indeed the project that debt will go on to finance anyway. So I think there's a lot of opportunity in that market, and I know that analysts would be sitting in the superannuation funds at the moment. They will certainly be analysing what the bond markets are pricing into, not only think about what the risk is, but also think about what the opportunities are, and they'll be thinking about the underlying issuers of those bonds and whether or not they represent good value. To your question about whether super might look to participate differently in asset classes that is maybe more direct or a little more straight to consumer. And we sort of certainly had, last time Larry Fink was in Australia, he raised the possibility of the participation of super funds in long dated mortgages, I think, which got everyone very frothy and excited for a second, because I don't know, it just turns out when Larry Fink talks, everyone goes ooh, which is fair.
That's an interesting idea.
Yeah. I mean, he's a rock star, so that's pretty fair. And
he does control the largest fund on the planet, so he probably does.
It's kind of exciting to meet him too. I fangirled myself, made to see. But it's it's something that super and banks have worked together on, for a long time. Our banking system, the way in which they participate in direct to customer sort of mortgages, is actually well understood by super funds, because supers are the major investors in the banks. And so, having said that, you have to think about that double exposure to mortgages as well.
Because that was obviously the response I expected, which was that if you were undercutting one of your largest invested assets by competing with them, what happens there? Not only that, I think the other reason it's so attractive at the moment is because rates globally are quite high, and the probability of interest rates from central banks coming lower in the next 12 to 18 months is clearly very high. So a demand for fixed rate, long dated bonding scenarios is probably going to drop. I think the final part of what we need to talk about at the moment is we have seen over the last 5 to 10 years quite a high amount of consolidation in superannuation. The access to individual funds is getting smaller. My super is certainly streamlined the good, bad, and the ugly. But we are now seeing a real consolidation in the industry, which economies of scale is arguing as a good thing. The flip side that I probably need to ask you is we have started to see the bigger end of the super industry start to increase fees. At what point do we start asking the question that scaling is good, but it's also going to lead to lower level of competition?
Well, I don't know if I agree with the premise. The there's a lot in that to unpack, but I think one of the things to point out at the beginning of that unpacking is that it's such a great feature of our system. I think that people can choose the style of fund they like to be invested in. They within 3 days they can hit a button and choose a different fund. And so I do want to make sure that competition, such that it serves the broader market, is something that the system is able to take on forever and ever. But there are numerous reasons why we've seen consolidation of superannuation funds, and just last night I participated in the sort of the wind up of a corporate fund, and a lot of the consolidations come out of that sector. So corporate funds were offered by your employer as a part of, I guess, the employee value proposition, when predates almost universal super. Certainly the one that I was at last night, which was Qantas Super, was 86 years old. So it's now rolled into a bigger fund, but it maintains its Qantas Super group branding in the bigger fund. So there's consolidation, and then there's consolidation, isn't there? There's a way of, I guess, putting back offices and investment teams and assets together that will make a difference to investors, to superannuants members over time. To the point of fees, I think if we look internationally at the way in which it's very hard to find a comparator because the Australian system's very different. But for the access that we get to invest in the way that we can, I still think that our system represents incredibly good value. And if you think about the returns, because it's about that's the trade-off, isn't it? If you think about the returns over 25 years at 7.5%, leaving inflation at the starting line, basically, and that's what goes into people's pockets. So I think I would, put it in that.
I've got to sort of go. The reason for that question is that, particularly in the post-COVID world, the rise of passive investing, and then the rise of the champions of basically fees to nothing. We talked about Larry Fink before, BlackRock, and let's also put in Vanguard, are now championing the idea that they're offering passive investment incomes through exchange traded funds and do it for next to nothing, 0.04 of 1% in some arguments. How do we counter that? Because what you've already said in this whole discussion, I know that's part of your answer, will be access to unlisted investments, the expansion of superannuation, because there is this current discussion that, and the fund flow tells you that passive investment is the future and low fees are the only answer.
Well, that's the great thing about the system. You can choose that if you like. So you can look at your superannuation account today, decide, I don't know if I value that active investment approach, or I don't know if I value that particular asset class mix, and you can online change to something else. And that kind of thing is to be celebrated. To have Vanguard come into the Australian market, to have beta shares. We've got the likes of, within the ASFA fund family, net wealth, platform sort of options. These are all great things for the Australian system because they encourage innovation, they encourage customer and member centricity. And so, 1,000 flowers bloom, I think.
Yeah, I think so too. Look, I did need to bring it up because, again, I know I'm going to get questions from the listeners going, why didn't you push Mary on this one? I can't believe it. We've already getting towards the end of this discussion.
It's
so
because it's super, you can talk about for days. My friends don't believe me and have stopped inviting me to things, but you can talk about super for days.
You can indeed. And that's why I'm so excited to have had you on. So I want to finish with the question I ask every single guest, because I can't wait to hear your answer to this, which is, if you were in charge for just one day, what would you do, Mary Delahunty?
Well, as a listener of your podcast, I knew you were going to ask me this. And so I thought about having some sort of lofty answer. But what I need to do first is clarify what I'm in charge of. And I've got the answers. Don't worry, I'm not expecting you to have them. And whether or not that comes with magic powers. So what I've decided is I'm in charge of the whole world.
Right.
Go large. And that, yes, it does indeed come with magic powers.
Go hard, go home. Yeah, go hard or go home, as they say.
And I've got two things I think I would like to do. And one of them came to me this morning as I wandered through. So there's my husband and I are blessed with 6 children. And not one of them, Evan, can pick up their clothes from the bedroom floor. And so, firstly, even though I'm in charge of the world and I have magic powers, that is number one. That is number one. Yep. And don't sort of hate on me for being in charge of the world and having magic powers and not going to world peace and everything. I'm going to presume that if someone of my gender is in charge of the world, that we've also probably solved a fair bit of the misogyny and sexism in the world.
I'm not hating you. I think this is fantastic, because I love when actually that individual problem in the household that comes about. I mean, as a father with 2 kids that are only 6 and 2, you can't blame them, because obviously it's. But I get the pain, right? And it doesn't matter how much you ask them. It goes in one ear and out the other. And I know that it will probably still take another 18 to 20 years before both of them actually understand why it's a pain in the butt. I'm
starting to fantasize about visiting my children in their houses when they're older and just leaving my stuff everywhere. Just everywhere. Yeah. But the other thing that I would do if I was in charge, and I think I feel like we're losing this a little bit, is the environmental concerns that this world is facing into are enormous and rapid. They are a problem of the global commons, and we actually need to have a serious adult conversation about how we are going to change our behaviour and transition this world and leave it in a better way for those misanthropes of mine that won't pick up their clothes, but for everyone really. And that's, I think, if I was in charge of the world, I think that's the conversation I'll be having right now.
And I think that's a perfect way to leave this conversation. Mary Delahunty, thank you so much for joining Exchanges.
Thanks for having me.
What an episode. I knew it would be big, and I knew that Mary would have some incredible insights into the industry. She was very good at particularly batting away some of the more trickier questions I was hoping to get her out on. That shows you just how incredible she is at her job, and also explaining why super is an absolute cornerstone of the household, of the economy, of the overall prosperity of our nation, because going forward, it is going to be that. It will stop our reliance on government and move it back to ourselves. From a behavioural economics perspective, that is absolutely fundamental. So, Mary, thank you so much for bringing your insights. I loved having you on. And to you out there, once again, thank you for listening. It's an absolute pleasure to bring you these. But don't forget, if you can, please, below, subscribe, put a like, put some form of description of why or you do or don't like it, because we love your feedback. And if you do have any questions, please write in to exchanges@evanlucas.com.au. We love bringing you those. But again, thank you to Mary Delahunty. Thank you to you for listening, and we'll see you again next week.